for joining us today. Thanks, Gary. Okay, I'll give it like 30 more seconds. We always have people who join late. We've got our loyalists that literally register for every webinar. They take in every piece of education that we can provide, so we appreciate that. Hello, my long lost friend. How are you?
Good. How are you?
Good. It's nice to see you.
Sorry for being late.
That's okay. We'll get started. We know that there's probably going to be some stragglers, and we always find that the time change also creates a bit of an issue. We have people that join in like right as we're finishing because they think it's at the starting time. But luckily, this is going to be recorded so people can join in or view it after the fact and share it with their team. So really, before we dive in, I want to give a quick shout out to the Sexton Group. They have been the sponsor of our webinar series for the year, so they help us bring really good content to our membership to make sure that we're educating folks on all sides and operations of the business. And today we're going to be talking a little bit about insurance. So the webinar focus today will explore how rising construction costs, inflation, and changing building codes may be creating hidden gaps in homeowner insurance coverage. It will also help identify common insurance blind spots and highlight the value of leveraging industry expertise at a renewal time. And to be honest with you, I never thought that the whole building code piece would actually have an impact on our insurance. So I think this is really good for us to learn. I'm really excited to introduce our guest speakers today. We have Parekh, who is a personal lines insurance advisor at Hub, specializing in home, condo, tenant, boat, cottage, and rental property coverage. Since beginning his career in 2020, he has advanced from auto advisor to his current role, earning his CAIB designation and licensure across Alberta, Saskatchewan, and Manitoba. Congratulations. He is currently completing his MBA at the University of Manitoba, where he previously earned a BA in economics. Originally born in India and raised in Kenya, Jamin moved to Canada in 2015 and brings a diverse perspective, a client-focused approach, and a strong commitment to community. Outside of work, he enjoys traveling and karaoke. Oh, I love that. We might have to hit a karaoke bar sometime. And serves as a board member for the Open Access Resource Center in Winnipeg. So thank you very much thank you for joining us on this webinar today. And Karley, who I've known for a few years now, Karley Middleton is a benefits consultant with Hub International and has been in the benefits industry for over 15 years, working with associations across Canada to implement member benefit programs and with Prairie's employers to offer competitive, sustainable employee benefits plans. Karley utilizes the access and resources of the country's largest insurance brokerage and applies it appropriately with the client-focused service of a boutique consulting firm. A background in workplace wellness has also provided Karley with a unique perspective in the insurance industry, keeping the focus on employee health risks that an employer can impact. So really excited to have both of you on. I'm now going to pass the baton over to you. You let us know if you want questions during the webinar, or if you want us to put them in the chat, or if you want us to wait until the end, but you're driving the bus and we'll pass it over to you.
Excellent. Thank you, Liz. And I love that you said we've known each other for a few years. Makes us seem fresh. So just to carry forward here, I'm going to get my screen moving. Everybody still with me on the screen here? Yes, yes, perfect. Okay, great. So before I jump into the content that you're all really here for and to listen to what Jaimin has to say, first, I wanted to welcome everybody. Thank you all for attending. We really appreciate you giving us a bit of your time today. We are going to go through a whole lot of information here. We're happy to take your questions. Really, however, Jaimin, if you'd prefer that we take questions at the end, that might help the flow. And then if anyone has any specific questions, we're always happy if you reach out afterwards. We're happy to have that conversation. So, further introduction to myself a bit. I'm the member benefits consultant for Supply Build Canada for your members and your employees. So that means I'm your primary contact for any of the member benefits that Hub administers for you. So I do have a couple of very quick slides before we head into the main content. I wanted to touch on your member benefits marketplace. So if you have never visited your member benefits marketplace, it is a very simple web address. It's all over the website and other material, supplybuildcanada.benefithub.com. And within that marketplace is a customized suite of voluntary benefits. It's 100% voluntary, meaning you only take advantage of the programs that you have interest in. All of these benefits are categorized into helpful navigational categories like our lifestyle benefits, group home and auto, personal and business travel, as you can see here. And these are all simply benefits that we have negotiated directly with the provider to put a consistent and competitive discount, preferred rate, product or service accessible to members just for being members of Supply Build Canada. So obviously, I'm not going to go into full depth on all of the benefits that are available that you can see here. We also have some of our personal insurance and, of course, the discount marketplace benefits. The personal insurance products are not meant to compete with an existing benefits plan. They are simply meant to supplement your personal insurance needs and fill any gap in coverage that you may have. So we encourage you to visit the marketplace, explore all of the benefits that are available to you, as well as the online discounts and cashback offers. And of course, if you have any questions about any of it, feel free to reach out to me directly. One last point I want to touch on, just because we are coming all across Canada here, a really cool part of the marketplace is the local deals. I like to use this when I'm traveling as well as when I'm at home, but it's a great way to find little local discounts and deals wherever you are, pretty much in the globe. You just mentioned your country, your province, your city, your postal code, or how far away your current location, and it will search for you. So I really encourage everybody to have a look at the marketplace, see what's available, see what interests them, and reach out if you have any questions at all. So with that, I will move it and hand it over to Jaimin. Take it from here.
Thank you. Hello, everyone. Thank you for joining. And before we dive into deeper, I just want to start with a simple question. Like, you can think about this one. Like, have you recently looked at a quote or a project and thought to yourself, that's gone up again, eh? So that's common nowadays, and that's where we are starting today. So because that exact instinct, that gut sense you all have for what materials and labor really cost in 2026 is the most important thing in this conversation. My name is Jaimin. I work as personal lines executive here at Hub in Manitoba, and I'm not here to sell anything. We'll get into why in just a second. So in the next slide here, we'll see like there are three numbers I want you to keep in mind for the next half hour. Just the next slide there. And first one being the 2.4 billion. That's how much severe weather cost Canadian insurers in 2025. That's last year. And that made it the 10th costliest year on record. The Insurance Bureau of Canada released that number in January. And what are the drivers? It was the ice storms that we had in Ontario and Quebec, those two alone cost about 490 million. And then we had the wildfires here in Manitoba and Saskatchewan that cost roughly around 300 million. And then there was the hailstorms in August and then floods in BC in December. So a lot happened during that period. And then we have the second number there of 24.8%. That's the increase in residential rebuild cost across Canada from 2021 to 2026. So you can imagine almost 25% in 5 years. That's crazy. And when some audits were done, like it was found that some homes were underinsured for about 80 to 100%. That's underinsured. So, and then we have the year 2026 at the end. That's this year. It's the year that 2025 National Building Code starts rolling out province by province across country. And that includes things like the new energy efficiency tiers, new climate resilience provisions, updated fire and accessibility rules, and so on. So these three numbers tells one story. The world like your home insurance was initially written in is not the same world you're building in today. And to briefly introduce myself here quickly, like I said, my name is Jaimin. I work here as personal lines executive, meaning I work on the consumer side selling home, tenant, seasonal, watercraft, and rental properties. And I write these policies every day. And every day I see this gap between what people think they're covered for and what their policy actually says. So most of these gaps don't show up until a claim happens, and by then it's too late. And now, what I'll be talking for the next 30 seconds is that I'm not going to quote your file, or I'm not going to ask you if you've shopped for your insurance lately. There's no QR code at the end. This is just money talk, like framed for your industry. Like I try to pick the topics because they're the three places I see like Supply Canada members getting genuinely surprised when something goes wrong, and not because like Hub sells anything in particular. Um, and by the time we wrap, we'll leave some time open. I'll take some questions if you have any, and I'll be happy to answer those ones. Moving on to the next slide here. So we'll be talking about the three blind spots that I've seen here. First one being the code compliance gap. So this basically it's what it actually costs to rebuild a home today's standards. It's not the same as what your home was actually built to. This is one of the most homeowners have never heard of. Second, it's the underinsurance trap. How inflation has quietly opened a gap between what your policy will pay out and what rebuild actually costs today. And this is where your industry knowledge becomes a warning sign. And then third, your industry as your advantage. Like the products you manufacture and sell every day are the same products that make a home cheaper to insure. And the homeowner should be getting credit for that. And we'll start with the code compliance gap. Like if somebody told you like their home is fully insured, what will that actually mean to you? Most people will say, well, the insurance company will put it back the way it was if something happened. That's the assumption, which it's almost right. But there's one word in that sentence doing a lot of work, and that is back to where it was, not back to the way the building official is going to require it to be in today's world. So let me walk you through a scenario that's not hypothetical. I'm describing like a claim pattern here. So, 2010 built bungalow here in Winnipeg, decent home, well built for its time. And then fire happens, causes a total loss. The owner has been with the same insurer for years, limit looks reasonable on paper. But when the contractor pulls the rebuilding permit, the building official says the home has to be built to meet the current codes, which by the time this rebuild starts, for example, in 2026, it will include the 2025 National Building Code. That means tighter air sealing or high insulation R values, updated fire separation rules, accessibility provisions, and so on. So all of that are a cost, and it costs more to all of that cost more than rebuilding to the 2010 standards. Now, if we look at the bottom there, we have something in red called that's the standard rebuild coverage. Standard rebuild coverage pays to put the house back to what it was, not what the law now requires. If you see the policy wordings, most of them will literally say materials of similar kind and quality and like occupancy. That's it. And then on the right, we have the bylaws coverage. Sometimes it's called a building bylaws endorsement, or sometimes some carriers call it code upgrade. So there's different name with different carriers, but this is a separate dedicated limit that pays for that extra cost imposed by the current zoning, demolition, and reconstruction bylaws. It's often a relatively small added limit on the policy, usually about 30,000 is included. But the question is, in 2026, with the new codes coming out, with the new laws, like, is that sufficient enough? In a lot of cases, and the homeowner it's not sufficient enough, and the homeowners doesn't find out until they're given the upgraded set of plans. So what's actually changing in this, like you would have more knowledge on the building codes than I do, like because you live this every day, you do this every day. But to just briefly touch on this, I just wanted you to see the four buckets that drive cost to a rebuild. One being the energy efficiency tiers, like requiring higher R values in walls and attics, tighter air leakage limits, and blower door testing. This all becomes a real factor. And that's not a small item on a rebuild. That's actually a big cost. Like it involves mechanical work, sometimes like a whole, for example, window replacement and so on. Second being climate resilience. Like we've already seen what's been happening in the last few years, and just recently we had the storm here in Manitoba. So with climate resilience, there are new provisions for severe weather adaptations, and the code is starting to react to the climate that's actually happening. Third being fire protection, expanded fire protection to between adjacent buildings, updated rules for larger structures. So if your project is on a tight lot, this actually matters to you mostly. And then fourth being accessibility. There are updated barrier-free requirements which may apply to substantial reconstruction. So a quick note on regionally here. This is where Manitoba and Saskatchewan diverge a little bit. Like Saskatchewan implemented Tier 3 of the National Building Code in January 2026, and here in Manitoba, we're still reviewing it. So the cost gap on a rebuild is going to land at slightly different times from province to province. But the direction is same everywhere. Cost is going up, not down. So to make this concept less theoretical, like we can talk about what happened in late March 2025. Ontario and Quebec, there was the ice storm there. They get the same. We get the ice storms here in prairies as well, but it's usually less severe. By the time it cleared, like more than 1 million homes in Ontario lost power, and in Quebec it was about 70,000 properties. All of this caused an insured damage of about 490 million. So on the right there are four claim categories that ice storm produced, and each one of them touches the code compliance gap that we just talked about. One being roof replacement. When a partial roof gets damaged badly enough, it crosses a threshold and it becomes a full roof replacement. That new roof has to meet today's code, which in many provinces means meeting specific attachment requirement, ice and water shields to a minimum distance, sometimes secondary water barriers, none of which existed when the old roof went on. Another one being electrical panel work. So all the older panels had like aluminum wiring or maybe knob and tube, or certain manufacturers. Anything pre-current code often just cannot be reinstalled as it was. If it's pulled, the upgrade has to meet the current code. Third, tree removal and landscaping. This one usually surprises people. Like most homeowners, policies cap tree coverage at about 1,000 per tree. And if you've got a mature elm down across your driveway, that's 1,000 against what it will actually cost, which is usually about 4,000 to 5,000. And finally, food spoilage and additional living expense. When power is out for days, like frozen food coverage kicks in, and it has a specific limit. Same with additional living expense, which pays out for additional costs that you have to that is incurred to you when you have to stay in hotels or get pay for meals if your home becomes unlivable. That also has limits, and it's usually tied to your dwelling limit. So the point is that these are bread and butter of what your insurance company is paying out right now, and every single one of them is exposed to a gap between an old policy limit and the 2026 reconstruction reality. So, and then the next section there. So if you're a builder, a supplier, or an estimator, you have an instinct of what materials really cost today. That instinct is the most powerful tool you have when you read your insurance policy. Because if your gut tells you that the rebuild number on your policy is too low, your gut is almost certainly right. And on the next slide there, you'll see some data there. So this data is from Verisk Canada, which is a major property valuation provider used by insurers to estimate rebuilding costs. And this number was released in March. So if you see from January 2021 to January 26, that's 5 years, like we discussed, the residential rebuild cost has gone up by about 25%. And in the most recent 3 years alone, the costs are up by 12.4%. Now, here's the part that should get our attention. Like, Verisk recommendation is that insurers historically used what's called an inflation guard of about 4 to 5%. That was the standard tool to keep policy limits moving with rising cost. But over the last 5 years, real rebuild cost inflation has substantially gone higher than that, which means even policies that are working as designed, they still have fallen behind. And like I mentioned before, like because of this, like we've seen like some audits were done and have seen like some homes were underinsured by 80 to 100%. And now the good news, like from March 2025 to 2026, like the replacement costs have actually come down slightly, like about by 2%, according to Statistics Canada. So this trend seems to be stabilizing, but the cumulative effect of the previous 4 5 years is still in the system. So a policy that was last calibrated in 2024 is still working with the 2020, sorry, a policy that was last calibrated in 2021 is still working with the 2021 numbers and not with the 2026. Now, I wanted to discuss quickly, briefly on these two numbers here. They are usually confused by most people and even by people who should know better. Like on the left here, we have the market value. This is what a buyer will pay for the house today. That number reflects three things like location, demand, comparable sales, and critically, it includes land. And it moves with the real estate market. And then we have the rebuild cost. This is what it actually costs to put the structure back. That number reflects different things like labor, material, code compliance, debris removal, and so on. And crucially, it does not include land since land doesn't burn. It moves with the construction economics, which is totally different from the housing market. These two numbers have moved in slightly complete opposite direction over the past few years. In some markets, such as like in Toronto, like the condos in Toronto or some homes in Vancouver, the market values have softened. Like we've seen like their prices coming down by like 5%. But the construction cost, on the other hand, has gone up almost by about 20%. So it's it's opposite directions there. So the big mistake that I've seen is that people look at what the house is worth. They Google up in, for example, on realtor.ca and see the number there and assume that's what their policy should insure them for, but it's not. The number on the insurance policy is what it costs to rebuild. That's it, period. So the three mechanisms that we should be knowing in your policy that are designed to handle exactly this problem, I'll go through them briefly. Names may vary based by different carriers, like Wawanisa wording may be different, a little different from, for example, Aviva, which may be different from Intact, but the general concept is the same, like they hold. First being the inflation guard that we talked. This automatically adjusts your dwelling limit each year at each renewal to keep up with inflation, which is a good thing. It's helpful. It moves the number on your policy without you having to do anything. But what you have to keep in mind is that it's often calibrated to a fixed percentage, like which is usually about 4 or 5%. But as we just saw, like the construction inflation has run higher than that. So while the inflation guard is helpful, it's not enough on its own. Second is the guaranteed replacement cost. This is the strongest protection in the personal lines world for a dwelling. What it does is even if your actual rebuild cost ends up exceeding the limit on your policy, the insurer will still pay to rebuild, which is a good thing. It is exactly the protection that you want against understated dwelling limit. But even with this, there are some conditions. Like typically, you have to insure the home to 100% of its value. You have to notify your insurer if you do any kind of renovations. And you also have to notify if, for example, you're doing anything, you're adding to your home anything that increases its value, you have to notify your insurer. Otherwise, if you do not notify them, they will void this guaranteed replacement cost coverage on your policy. And then third being bylaws coverage. We covered this on our previous slide. It pays the extra cost imposed by current building laws, which is exactly the gap we identified before. So usually there's a limit included in your policy, which is good, but it's usually a limited dollar amount. Most I've seen it's about 30,000. So it's worth a hard look to what 2026 will, with the new building codes rolling out, it's worth to look at that limit. And if you take nothing else from away from this section, these are the three concepts that I would suggest, like by name, that being the inflation guard, guaranteed replacement cost, which is also known as GRC, and the bylaws coverage. Like your broker should be able to tell you on the spot which of these you have and what your limit is on these ones. And then your industry, we'll talk about your industry here. Up to here, we've been talking about gaps. So now I want to flip this conversation because the products that you sell or your members manufacture and distribute are exactly the products that make a home cheaper to insure. You are already in the resilience industry, and your renewals policies should reflect that. Some of the credits that you can earn at renewal, I've divided them into 6 categories here. You might know some of them already, but others might surprise you. One being like updating your shingles. Like roof is the most rewarded upgrade in, especially in hail-prone regions. Here in prairies, we are a hail-prone region, and giving an example of Calgary, the Calgary hailstorm back in 2024 alone cost about 3 billion in insured damage in just over an hour. And that's why insurers, like your carrier, insurance companies care about your roof. Second credit that you can get is from water leak devices. These water leak devices, they monitor water flow continuously. They detect any anomalies that suggest whether there's a burst pipe or a slow leak, and they automatically close the main valve. And major carriers like Aviva, they offer credits for this. And a major reason why they offer credits for this is because water damage by claim count is the single biggest source of homeowners claims here in Canada. Another credit that you can get from is from having a monitored alarm system. Notice the word monitored. Like some people have local alarm, which where they can monitor from their phones, or it makes a noise when you're not home. But that might give you either a small credit, or some insurance may not offer you credit for that. But when you have a centrally monitored one, where it's your alarm system is monitored by an alarm company, and if something happens, they call out a dispatch, that can earn you a really good credit for your insurance policy. Another one that's coming up is the defensible space and fire smart landscaping. This is increasingly relevant in wildfire exposed regions of especially in Western Canada. We saw the wildfires here in Manitoba and Saskatchewan in 2025, which cost about 300 million in insured losses. And then there was the Jasper wildfire in 2024. So insurers, they are looking at this, the space, they're looking at the fire smart landscaping, because all of this can affect eligibility for your insurance, or it could affect the rating factors, which could affect your premium. And then fifth, we have the updates, for example, if you update your electrical, plumbing, and roof, this can earn credits. This is one of the this is one that most contractors and suppliers underestimate. Like, for example, if your home had aluminum wiring, and if you remove that, or if you remove knob and tube, or replace galvanized pipes with copper or PEX, or you replace an old roof, all of this can earn you credits at your renewal. And I highly suggest that whenever you do such kind of updates, let your broker know, because it could help with your premium. And lastly, we have the energy efficient mechanicals. For example, if you have like high efficiency furnaces, heat pumps, modern furnaces, all of this can be rewarded because they are tied to lower failure driven claims. So again, just a reminder, if you've done any of this work on your home in the last few years even, and you haven't told your broker, I highly suggest to send proof to your broker letting them know that you have done these upgrades and to update your policy accordingly. And even if it doesn't give you credits, I still suggest you to send it to your broker or to notify and tell them to notify the carriers. Because anytime, for example, if the carrier does an audit of your file or your policy and they see all these receipts, it shows them that you're a responsible homeowner. And if something like, for example, if there's a claim in the future, this could uh, work on your advantage. And then in the next slide here, we'll talk about, we'll quickly look at a regional review view here, because every credit, like it's not the same everywhere, right? Like underwriting follows the loss pattern. So what matters in BC is not the same that what matters in, for example, in Manitoba, it's not the same as what matters in Ontario. Like for our region here in Manitoba and Saskatchewan, usually the primary risks are like hail, severe storms, and wildfires. So, and then we have in springs, we usually have the sewer backup issues. So the credits and endorsements that move the needle here will be like updated roof, if you have sewer backup prevention devices or monitored fire alarms for your property. These are ones that could earn credits to your properties here. In Alberta, it's a little different. Alberta it's dominated by hail and wildfire. Like we saw, like we discussed, the Calgary hailstorm caused about 3 billion in damage. So over there, like hail resistant roof could earn credits in those regions. In Ontario and Quebec, they're mostly faced with ice storms or flooding, just like what they faced in 2025, causing 490 million alone on those regions. So in those areas, like some pumps, or having a battery backup for your sump pump, those things could earn credits in those regions. In BC, it's wildfires and floods again. Like in 2025, the December 2025 floods was big over there. And then BC, usually you'll see every year they're prone to wildfires. So anytime if you install water leak prevention devices, or if you have fire smart landscaping or defensible space, those could earn credits you in those regions. So basically, if you're insuring a property anywhere outside your home province, for example, if you have a cabin here in Falcon Lake, for example, or a rental property in Calgary, usually the underwriters is looking at that location. You will earn credits based on that local region and not where your home address is. And in our next slide here, these are the 5 questions that I want you, like, I usually suggest people to ask to their broker at every renewal. You can take a photo of this slide if you want. First question being, ask your broker, what is my dwelling limit? And when was it last evaluated or refreshed? Ask them that, because your broker will be able to tell you when the evaluation was last done on your home. Usually most brokers will do it every 5 years, but like what as we have seen with the last 2 3 years, the cost has really gone up quite a bit. So I would suggest like telling your broker every year to refresh that value so that you're insured to the correct limit. Second question is, ask your broker if you have guaranteed replacement cost and whether you're meeting all the conditions. Because, like I said, for GRC, which is guaranteed replacement cost, to be applied, you have to notify your broker if you're doing any type of renovations. And for example, like some renovations, like for homeowners, they may seem small to you, but for insurance companies, it's a cost. So even if you're updating your flooring or any kind of renovation you're doing, notify your broker just so that the GRC is not voided. Third question is ask your broker, what's my bylaws coverage limit? This usually, like most homeowners don't ask this, but with recent changes, this can be a big blind spot. Make sure like you have like if you, a 30,000 limit in bylaws nowadays, it's not enough, especially with the changing building codes. Fourth question, it's what limits do you have for water damages? So with water, like there's several types of water claims. There's sewer backup, overland water, there's escape of water, for example, from pipe burst, that kind of thing. So all these three could have different limits. So ask your broker how much limit you have with each of these water related claims and what the deductibles are for each. Fifth question to ask is what credits are you getting and what credits are you missing out on? So if you've updated your roof, let them know, tell your broker that you updated the roof, send them receipts or proof so that you get the credits for that. Or if you recently installed an alarm system that's monitored by a company, send them an alarm certificate just to make sure that you are getting the credits that you qualify for. And in the next slide here, so here's annual this is just a good homeowner practice here. So annually, like I mentioned, update your replacement cost. Tell your broker to update your value each year. Don't rely on the inflation guard that's included in your policy because like I mentioned, usually that's a modest percentage. They usually increase your limit every year automatically by either 4 or 5%. But as we discussed, the construction cost nowadays, it's costing it has gone quite a bit, much higher than that. So I would highly suggest that you update your replacement cost each year. And if you do any renovation, again, it is a contractual requirement for you to notify your broker, to tell them to notify your insurance company, just so that if you skip this, you don't want that GRC or guaranteed replacement cost voided just because you thought that your renovation that you are doing is small for you, but you know, so that's there. And yeah, if you do any upgrades to roof, water sensors, alarm system, notify your broker. And here in Manitoba, for example, usually not just Manitoba, in Canada overall, like most claims happen during uh, what I see is between May and August. Like that's where the bulk of weather-related claims happen. So before that period, I would highly recommend you look at your policy. Just make sure that you have sufficient coverages, whether it's for water related or your deductible is sufficient enough. Just review it before this period to ensure that you are covered for any weather related claims. And lastly, the takeaways here, if you forget everything else, these are the three things that I would highly suggest you to take from this. One is your industry knowledge is your warning sign. So if your gut says that the rebuild number in your policy is too low, often your gut is right. Trust it. Tell your broker to reevaluate your dwelling limit. Second, there are three numbers worth checking at every renewal. One, it's your dwelling limit. Nowadays, it's the bylaws limit and the credits that you're getting. And third, you can make your home cheaper to insure. The products that you already sell every day, that includes resilient roof, water tech, monitored systems, modern wiring and plumbing. This all can earn credits. So you're already in the resilience industry. So make sure your renewal policy reflects that. And that's all I have for you today. And I'll be happy to take any questions.
Yeah,
I know
thanks
it
for
was a
that.
lot of information, but yeah, if you need
There-
any clarification, I'm happy to answer.
There was a lot of information, and obviously we're open to questions. I was curious about your comment about the building code piece because even though we're at the 2025 National Building Code, not every province has enforced it yet. So is that like and I think you might have mentioned that we need to look into it, but if it's not enforced yet, then how can that be what people are required to build back to?
Yeah, so that's true. Like the new codes were released like in 2025, but some provinces like Saskatchewan started rolling it in 2026. In Manitoba, we are still like they're still reviewing it and it's not rolled out yet. But it is always worth it because, like I mentioned, like usually most policies include an automatic limit of 30,000. But with the changes nowadays, for example, if your home had aluminum wiring previously, and to replace that, to replace the whole wiring in your home, that's a really big cost. And
Yeah.
if you do any update, like if your electrician comes and pulls that, they cannot replace it with, put it back with aluminum wiring. No, they have to replace it with modern copper wiring, right?
Right.
So that could be a big cost. And based on your, because each home is different, based on what your home has, you should definitely look and ask your, for example, if it's the electrician, get a quote and see how much it is and whether your bylaws limit is sufficient. Because sometimes what I've seen is like 30,000 might not be enough to meet those codes.
Mm. Well, my in-laws had a house fire. I know when we look at some of our insurance stuff, we're like, oh, this is never going to happen. But we have a very stark reminder that shit does happen, right? My
Yeah.
in-laws had a house fire in the winter. And obviously right now there's been a lot going on from the weather perspective as well. So appreciate the tips even on the renovation side. We just redid our roof and I have not submitted that in yet. So
Yeah.
does anyone else have any questions? I took pictures of the slides you told us to take pictures of, so
Yeah. And
we'll do
yeah,
my homework.
again, going back to the renovation, like even if you send to your broker and the broker says, oh, this doesn't affect your premium, but it's still a
Yeah.
good practice to keep sending them whatever
Right.
changes you do. Because if there's, for example, if your insurance company does an audit on your file and they see all these receipts and proofs, it does show that you're a responsible homeowner, which could work on your favor, right? In
Right.
case of a claim. So
Well, and we're also in interesting times because when you look at the geopolitical landscape, building materials right now are at about a 20% average increase just
yeah,
with some of the input costs because of tariffs, counter tariffs, the petroleum piece. So
yeah,
I'm glad that you brought, I mean, I'm not glad, but it's a good thing that good food for thought for us to make sure that we're keeping mind of.
yeah.
If no one else has any questions, obviously, if there's something you want to follow up on, you're more than welcome to reach out to Jamin and Karley if you have any further questions. We do have some upcoming events. Actually, I was going to paste it in the chat, but Camille is very efficient. So we've got some webinars that are coming up for manufacturers, how to be a better retail partner with Order Ease, order orchestration, buzzword or competitive advantage with Order Ease, and the role of technology in increasing revenue with Order Ease. So if there's any manufacturers on the line, this one is for you. We've got some in-person events that are coming up. June the 18th, we have Built Her in Winkler, Manitoba. We have a guest speaker that's coming in who's been on our podcast. So everyone's welcome to attend that one as well if you're in the Manitoba area, or if you're not and you're traveling in, please do register. The information is on our website. June 16th, we have our 2026 Barrier Tech BC Golf Classic. It's our first golf tournament in BC, and it is done in partnership with the BC Wholesale Lumber Association, Framing the Future and Supply Build Canada in Surrey, BC, which we're excited about. And then July 23rd, we've got Built Her upcoming in Edmonton as well. So thank you everyone for joining us today. Again, we will be sending out the recording of this. So if there's anyone on your team that you want to share this with, obviously there's a lot of important information for anyone here who is a homeowner. So we encourage you to pass this information on. And of course, if anybody wants to connect with the Hub team, you're more than welcome to do so. And I wish all of you a really great rest of the day, and hopefully we'll see you on our next session or at an event very soon. Thank you very much. Take care.